Futures flat to slightly down. The Asian markets are up. In fact, Japan up 1%. European markets are up. Was this so well telegraphed that the market is reacting right now in a muted way?
I think so. You know, a lot of money's already come out of this market. In the last month, you've seen a lot of money come out of ETFs, even commodities, and a lot of that money's gone into fixed income. So the defense trade has been put on already, and we're at $34 billion right now. I would expect if we go to the next level at $200 billion, we'll take another leg lower.
You think, okay, yeah, because right now, and we're not going to make light of it, but right now, $34 billion plus 16 that's going to come in 2 weeks, $50 billion is your number. That is on a global scale, a small number.
Very small.
I mean, you know, it's a big, but the fear is I shove you, you shove me, then somebody throws a punch. Next thing you know, we're rolling on the ground. If this does escalate up, what happens to the U.S. equity markets?
It's challenged, for sure. Look, make no mistake, this is a concern for investors at this point. But look, I agree with the president. The trade system is broken at this point. And it's not just the theft of intellectual property out of the industrial marketplace. Look at the military complex. China's J-31 strike fighter looks strikingly similar to a Lockheed Martin F-35.
They've got a jet that looks just like the Boeing 737. Have you seen the Land Wind?
Yeah.
It's a Land Rover. It looks shockingly like the Land Rover Evoque. I mean, almost exact copied.
You know, defenders of the status quo are likely the architects of the current system that we have. Where I take issue with the president is the communication of the message. You can't have Mnuchin and Peter Navarro out on various networks talking their book, trying to influence the president. That should be done behind closed doors, and it makes for havoc in the marketplace, and we get these sell-offs.
And that's the big the markets can handle and adjust to known quantities. Okay, 34 billion, now 50. Let's tweak our numbers a little bit. We can figure out where fair value is, where valuation should be, et cetera. We don't know what the next leg is. We don't know what's going on behind closed doors at the White House. How much do we factor in those unknowns into figuring out how we invest for the next couple months and quarters and even years?
I'm not sure that we can. And
that alone is scary enough, though, isn't it?
That makes the problem. But I think we know that conversations are going on. We're even hearing word out of Europe that some of the auto manufacturers out of Europe are going to their constituents, going to their politicians and saying, hey, let's cut a deal. We'll likely have to come back, do something with truck tariffs here in this country. But that's how these things play out. Right now, the usual suspects are taking it on the chin, the global players, the Boeings, the Caterpillars, and such.
I know China gets the headlines, but we've talked about it. They don't buy that much stuff from us. Soybean farmers in America are being hit hard. We know that. There are industries that are getting whacked. But on a macro level, China mostly buys scrap metal and ag products from us. Europe does not. Europe buys over $1 trillion in goods and services every year. If this escalates on the European side, David, what's the risk?
Well, then the trend that you're seeing will continue. Domestic stocks will hold up best. Money will go into utilities and such. You're already seeing it.
Utilities the best performing sector, I think, over the last 30 days. If not
I think that's the long end of the curve. They're seeing the spread between 5 and 30s right now. It's at the lowest level since the
bonds have held up. Do you think that people are parking in bonds and utilities? They're renting. They're not there to live. But they want to hold their money a little bit in a safe spot.
I think they're scared, and it's pretty scary when you come in every day and you see some of your favorite names getting hit. Look, the secular growth engines will still do well. The FANG, that's why the money's pouring into FANG right now, because they're the global not the cyclical player, but the secular player, and they're the defensive stocks right now.
Yeah, there's no indication that Amazon or Netflix is going to be hurt at all if the trade war escalates. Correct? I mean, you're not going to stop watching, Bloodline because we're at a trade war with China.
It's not just them. You see small caps are doing well. They're largely domestic revenue. Even restaurants here in the United States, companies like Darden, they'll do well as well.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.